Hello guys, welcome back to Royals Capital. Today we are breaking down starting with Euro USD first from the daily time frame. We are going to break it down to the hourly time frame, and currently price just rejected a significant support, a significant resistance that we marked out yesterday, and we are going to trade a setup today. So if you are trading Euro USD, if you are trading Euro USD today in the New York session, this is a setup I would advise you watch closely. Alright, so let's jump right into the chart. Alright guys, so if you have been following me and you watched my video yesterday on Euro USD, I marked out I marked out let me zoom in a little bit. I marked out this level and this level right here. This was the daily level that I refined to a 4-hour level. We have three zones here, here, and here on Euro USD yesterday, while price was around this area. And I said we should expect a fair share of retracement back to this daily zone. But then it's a daily zone, we most definitely going to get price fluctuation. So we refined it to 4-hour. So it did not reach the 4-hour, but it went very close, and then we saw the rejection, which was exactly what we want to see. We saw the rejection, and then the next candle fell. So this rejection was right at London, London's session, and then the next candle fell. So this is the perfect setup. We already see the confirmation. Now we just need to jump into the market. But the thing is, we cannot still be bullish and jump into it until when this 4-hour candle has fully formed. Okay, before I jump right into this, let's make a quick breakdown of what we are seeing in the market currently. So here we are on the daily, and what are we seeing on daily? Daily is currently in an impulsive move. From here we've been going up. We hit a key level around here. This is a monthly level. This color indicates monthly. This is a monthly level, and then we started coming back down. Started coming back down. So yesterday I marked out this level, and price was coming back down, and I see we should observe this level and check. We should observe it and see how price is going to close around it, and then price hit it and close above it. Today the market opens and it start going up. And mind you, yesterday I've already marked out our point of interest from the daily. This is a bearish order block, which I marked out here, which is this daily. Let me zoom in. This is it here, a bearish order block corresponding to this daily line right here. But then what did I say? Since this setup is on the daily, we can't just, since we have the zone here, we'll just enter, place our stop loss above it. It's going to be extremely wide. So what do we need to do? Number one, we need to refine our entry and our point of interest. That's number one. And number two, we need to wait for confirmation. Because this is another block, the market can, decide to come to this rejection block right here before going back down and all that. So we need to refine. So that was why I went back to the 4-hour. And what did I do? This is where the other block, the daily, bearish order block is. And then I refined it right to this open close right here. And what did market did? It's reacted off of this level. This a weekly level, and then it started going up. And what else? We saw this rejection around close to the level. it started coming back down. So now, why are we not considering, oh, we are buying and this and that? No, we are currently in a bearish storyline. We are currently making lower highs and lower lows consecutively. Market is respecting bearish order block consecutively. So, which is why we are going to sell here. But like I said earlier, we won't dive in. We won't know. We can't know for sure if this is a valid bearish order block until this candle has fully formed. If this candle closes bearish fully, then we are going to enter. If it closes fully and the next candle is forming, we are going to place our, what do you call it, limits entry here, stop loss a little bit above here, and that's that. And we can refine it one more time. We can refine it one more time. This is our entry here. Can you see that this is a fair value gap that we marked? So we are expecting the price to come into this fair value gap and then, you know, go back down. This is the bearish order block. Even though we have a breaker right here. Why? Because look at, we have a pool of liquidity all above here together with this. All these are liquidity, and then within one candle the market take it out, hits the level, and then start coming back down again. So this is a breaker. And mind you, in ICT, the whole candle, the whole level usually is to be where you are going to, if you are placing your entry here, stop loss should be above here. But thanks to our strategy, we have a more refined, like a more refined level. And this, I think this is normally called unicorn strategy or something like that, because this is a breaker. We have a fair value gap here. Gap of opposite here is also a fair value gap. Fair value gap filled with fair value gap. So this is a balanced price action. So once price comes back here, we should expect it to just go back down. So have fair value gap here. I will need to go down to the lower time frame to see if I can. Can you see? We have an A high here in the fair value gap, and then we have another, let me call it a little order block. I don't normally used to go back down as far as this, but I'm trying to make our entry more reasonable. Yeah, I think there's no need of going back down to lower time frame. Let's just leave it the way it is here. So what we are going to do is, if this 4 hour candle closes bullish because it's currently, retracting. If it closes bearish, sorry, not bullish. If it closes bearish, engulf this candle here, close bearish, all we are going to do is immediately, as the next candle is opening, we are going to place our limit entry here, our stop loss above here. This should be a few pips. I don't know. I'm coming. Is 420. Yeah, we need to refine a little bit. We need to refine a little bit. We still need to refine a little bit, guys. Let me go down to the 1 hour. And the 1 hour, it's all the same. I'm saying this 420 to 490. That's how many pips? That's like 60 pips. So we still need to define. That's 70 pips. So the stop loss is actually very, very, very wide. So we need to refine this. Like, I'm not really seeing, I'm not really seeing that much level. I'm not really seeing, even on the 15 minutes. Let me check the 30 minutes. Can you see? I'm not really seeing any level where I can refine it to. Okay, guys, so this is what in, in case scenarios like this, instead of just diving in with your full position, this is what we'll do. We'll place the limit entry right here with half of your position. If you are risking maybe 2% on your account, place your position with 1% right here. Stop loss should be a little bit above this high here. Are you guys following me? If you are risking 1%, place 0.5% here and then stop loss here. So the moment the market reaches there, triggers our limit entry, and we are in the market, and we start seeing rejection. Maybe something like this again. Let's say this candle here, something like this form. Once the next candle opens, we saw it comes and then rejects, and then we saw this coming back down. Then you can, still do the same thing here. Mark out a level and then place the remaining position right there. And the two positions should have the same profit target, which is our profit target should be our profit target should be this equal lows here. So here's what I'm going to do. Our sell limit should be here. Take profits. I'm going to put exactly this low, and then stop loss should be, that's roughly 1 to 6. Yeah, roughly 1 to 6. So that should be our level. So mind you, for this position we are entering with half of our risk. So once it goes down a little bit, we'll enter the remaining position, this 1 to 6, and let's see how it plays out. So I can make a quick recap on on the market once it hits the position. But mind you guys, this setup here is only valid if this candle closes bearish. If it retracts up to, let's say, around here and then closes, then it's not a valid setup anymore. The probability has reduced drastically. We are supposed to see a strong bearish indication here, but can you see it's retracting? Even though, yeah, there's still over 1 hour, but still we need to keep cognizance of that. So if it closes bearish, I would like it to close below here, or it should close, yeah, I would like it to close below here. Once it closes below this candle's low, that's a full indication that we are going down. But if it does not, then we'd have to wait for another setup. We have to wait and see what the market wants to do. So I think that's everything I have for you for EURUSD today. So if you find this insightful and helpful to your trading journey, do well to like, subscribe, and comment me on what you think on the market. Let's discuss. Until we meet next, I wish you happy trading.